Hey guys, this is Cody Kessler. We are here live at the Rockville office of Kessler Lending Advisors, Division of Homebridge, and we're doing our Wednesday edition of KLA Now. So I've got Pat Kilner from the Kilner Group of Keller Williams, and we're going to sit here and we're going to talk today about what not to do before buying a home. Some of the stuff that we'll be talking about is specifically for first-time home buyers. Some of the information you can use, it doesn't matter whether you're a seasoned vet. If you haven't been through this process in the last, I would say, couple months, 6 months to a year, this is going to be good information that you're going to want to know. Might be a refresher for you, what have you. Before we jump into the details, this is a live show. So if you guys have questions, if you're checking this out, we do have somebody that's watching Facebook. Ask questions. We want that live feedback. We'll do everything that we can to answer the questions. So before we get into this, buying a house, there's so much that goes into this that a lot of people just miss. There's huge myths out there that people want to make it feel this warm and fuzzy, transaction, and that nothing could go wrong. And so that's actually the first mistake that people make. You have to look at this as it's a business transaction. Well, yes, you are buying a house and it does feel great, but save that for later on after you've closed and everything has gone well. As you're approaching this, make sure that you remember, this is a business transaction. You're signing a huge contract. You're making a commitment to a bank for 30 years possibly, and to make a payment. So these things are serious. You need to take them as such. That's tip number one. Tip number two, make sure that from a credit standpoint, you're doing very specific things. A lot of banks talk to you and they're saying, hey, listen, don't have any other banks pull your credit. Guys, this is the biggest sales tactic that you've ever seen. Here's why. Mortgage companies don't want you to talk to other mortgage companies. Why? Because it's competition. So they tell you not to have other mortgage companies pull your credit because your credit score is going to go down. Guys, that's a lie. It is absolutely false. Here's some of the things that you need to know. When you pull your credit, so if I were to pull your credit and Pat's my client, today counts as that first credit pull. It opens up a window for 14 days that you can go around and have your credit pulled by as many mortgage companies as you would like to, and it only counts as one credit pull. So make sure you're shopping. If you think about it, logically, the credit bureaus want you to shop around. It's actually counterintuitive to think that the credit agencies don't want you to talk to different banks because they actually want you to get the best rate that you can. So remember, talk to multiple banks, have them pull your credit, but do it all within a 14-day window so that you know that you're shopping. Credit, to continue along that vein, as you're going through the buying process, don't make any big purchases. I know that this sounds like it's pretty normal stuff. Don't go buy a car. Don't put multiple. How many times do you see that you have an agent where they'll put multiple offers on different houses and the client doesn't know any better?
Or the client's driving that too. They go, well, why can't we put it? And the agent doesn't know enough to counsel them not to do that. So
what are some of the ramifications of that though, legally?
Well, clearly, if you've signed to go ahead and buy two houses,
yeah,
you sure as heck better be able to perform.
Because if both of them get accepted, you have to buy both, right?
Exactly. So you could put out a contract that's totally ratifiable by two different sellers, and all of a sudden now you've got two sellers who have accepted your offer. What does that look like? Unless you want to be an investor, that's not typically a strategy we recommend.
Yeah. So from a lending standpoint, you're talking about you've now misrepresented yourself to the seller because you don't qualify to carry both of those. So from a legality standpoint, can that seller come back and actually sue you?
Sure, and because you're representing that you can and will perform, and you know the contracts as well as I do, you're saying that you have the ability, that you've already actually done the homework up front to get the approval, this pre-approval, this pre-commitment that you presented, and that radically changes when you go buy another house, obviously, or a car. We see debt-to-income ratios go through the roof all the time with folks, and that's why for us it's hugely important that you get ahead of the game with a really good lender. And so before we ever even meet with our friends who call us, we'll have folks who call us who've known us for a long time. Maybe this is the second time that that we've worked with them, and before they even pass go, before we show them a single house, we want to make sure that fiscally they're in the right spot, because we never want to overextend them. And so speaking to you guys is always part of our process to make sure that we've got everything lined up. If we, it's the whole paradigm. What's in your wallet? If you don't know what you can afford, and you go looking for a house, chances are you're going to fall in love with something that is a little bit out of your price range.
Exactly. So, to go back to the tip of what not to do, you don't want to expect that once you go through the mortgage application process that you're back to business as usual. Everything you do, you have to run past your lender. You want to buy a car? Don't buy the car. Call your lender first. Make sure that you can actually afford to buy the car. Make sure that it doesn't throw off your actual mortgage application and your debt to income ratio, as Pat said. Here's the last tip on this. When you close, you're actually going to sign something that even if the lender doesn't catch it, because often lenders will pull multiple credit reports. A lot of them pull a credit report right before closing just to make sure that you haven't bought anything new. But in this instance where they don't, you're going to sign something that says you haven't taken out any new debt. If you don't say the truth, then you're possibly committing fraud. So make sure that you understand, get all your finances in line, apply for your credit cards, buy your cars, do all that before you get into the mortgage financing process and before you start looking. You hit on the third tip that I was going to talk about is don't buy with emotion, okay? Business transaction. If I were to take the warm and fuzzy house and take it out of this transaction, water it down to what it actually is, how many pages is in the contract right now?
Just about 60.
60. 60 pages, guys. So if you're not going to read all 60 pages, and a lot of people don't understand what are in those 60 pages, which is actually, we talked about last week, why you need a good agent, because they're going to go through that contract and talk to you about loopholes, protections, exit strategies, all of that. But if you're really talking about what you need to be prepared for is a business transaction. Because if you were buying a business, would you rush into it? Absolutely not. You would have all the money squared away. You would have probably an attorney looking at all your contract documents to make sure that you weren't being taken advantage of in any way. But the amazing thing is that you insert that house back into the transaction and people lose their minds. The heart tells the brain, get in the back seat, I'm driving, and we've seen it countless times. Your heart will win. The emotion will take control of this. So keep that in check. Don't go, and it happens all the time. People go online. It's probably the most common thing right now. They start looking for homes, Redfin, Zillow, all these places. They fall in love with the house, and then the next thing that they know is they're calling a real estate agent saying, hey, please open up the door. And then they call a mortgage company and say, hey, I need to get a pre-approval in an hour. Guys, that's the wrong way to go about this. The reason being is you're letting a transaction drive the finances. You as the buyer, the consumer, you carry all the risk on this. You have all the exposure. The agent doesn't. Certainly the seller doesn't. And most importantly, I don't, as the bank. We can give you a pre-approval letter in probably 2 minutes that isn't worth the paper it's written on. And if we're wrong, which 99% of the time we will be if we haven't done any of the due diligence, you as the buyer carrying all the potential ramifications and exposure. You're the EMD that you can lose. You're the one that can end up in court because you put that contract together and then now you have to live up to those terms with the seller. So slow down. That's the advice here. Slow down and approach this as it is a business transaction.
You know, you mentioned Zillow and these are fun tools, but I think people really have to understand why they exist. Frankly, they sell advertising.
Yeah.
They sell leads to real estate agents. So understand, as you're online looking at stuff, and frankly, most folks are looking on apps. It's a very dynamic, fun way to look for stuff. I've got some apps on my phone. It's a blast. You're in a new area, you're looking at stuff, and you're going, I wonder how much this house would sell for. And they're really cool, slick apps. They're designed to get as many eyeballs as humanly possible so they can sell advertising. So understand, first of all, the data is not always perfect. And frankly, as an agent, it's totally shifted the paradigm. When I first got in the business years ago, the paradigm was you needed an agent in order to get access to these things. Now it's all open source, which is great. And I think that's really excellent, because what it's forced agents to do is really drill down on what their value proposition is. The value proposition is as a fiduciary, is as someone who guides you through the transaction, and that's where a great lender comes in play. Because frankly, if we don't know how much they can afford, we're going to overextend, and people are going to fall in love with stuff. So feel free to use the tools online, but understand what they're there for. And one of the things that we do and we insist on is everybody, even if you've bought or sold with us before, is we sit down with you and we do a consult. It's free. but we'll spend the time up front to make sure that, one, you're not looking at stuff that you can't afford. Two, that you understand exactly what the process looks like. Yeah. The game has changed so much in the 14 years that I've been in this business that, frankly, if you bought 3 years ago, the game's a little bit different. The contract's a little bit different. The speed of the transaction is different. And so it's important for you to understand what the playing field looks like and how we're going to guide you through that process.
So the tip, in my opinion, is understand that the online websites, it's advertising. You know, they're not doing this information for free because it's in their best interest. Their best interest is to make money off of the volume of people that are looking at these houses. I know a lot of people, and you probably get it all the time, they go to Zillow and they think that the listing agent, when they say, yeah, I want more, the agent, excuse me, when they click on, I want more information, they think that it's the listing agent for that property, and it's not. So, you know, it's not to say that that's a bad option. You just need to be aware of what that is. Yeah. So I would go backwards and just make sure that if I'm telling you what not to do, it's you never put the house in front of the transaction. You always need to get the numbers squared away, and I said this 2 weeks ago. You never fit the house into the numbers. Yeah. You fit the numbers into the house. Excuse me, I just said that backwards. Yeah, I don't even know my own stuff these days. You never fit the numbers into the house, you fit the house into the numbers. Meaning that you talk to the bank first, you get everything squared away, comfortable monthly payment, cash into the transaction, then you get the agent to go out and you're actually having the agent work for you. You say, this is what I'm qualified for, this is what I'm looking for, now go find me what I want in this price range. Yeah. It's going to make sure that the transaction works for you, that you are the one that is in control and driving this. So, you know, those are the things, in my opinion, unless there's anything else that you got that what not to do, I would say that those are the big things that I would want to touch on.
Yeah, I think that's, you know, if you start the process, really, it's all about starting the process right, on the right foot, yeah, and not putting the cart before the horse.
Sure.
And it's true in so many things, no different in buying the biggest asset that you'll probably ever buy.
Absolutely.
And where your family will probably live and have, you know, entertain others and call a home for so long. So it's a hugely important thing. You know, we say you can't buy sanity. Well, one way to ensure it is to make sure that you up front.
Okay, great.
Good.
Yeah, we have a question here. So question is, if I have debt, is it better to pay it off or save money? That's actually a great question. And the high level answer is, without obviously seeing the structure of the debt, oftentimes it is actually better to pay off debt because you're leveraging short-term debt against long-term debt. And for every $1,000 that you borrow on a mortgage, the monthly payment of that is just about $5, a little bit less than $5 per month. So if you were to pay off a $10,000 credit card that probably carries a $500 or $600 a month payment on that, just minimum payment, paying that debt off of $10,000 to get more of a qualification range for you, basically opening up your qualification level because of lowering the debt to income ratio. Generally speaking, it's better to pay off debt. You don't need to have a ton of cash to buy a home right now. There are products that have low down payment. But it's really difficult to answer that with a high level of definitiveness simply because we don't know exactly what your specifics look like. But great question. If you would like to get into more on that, you know, give us a call. We'd be happy to run through that for you to get you those answers.
And it just depends on the debt, right? Obviously, there's good debt or debt that's really digging into your debt to income ratio, and there's debt that is at a really low rate that you've leveraged in order to maybe get an education, and sometimes that's long term, but it's a really good rate.
Okay. So, yeah, we got another question here. I don't know what that says. We're gonna go back. We'll come back to this once I get some clarification on what this question actually says. I can't read the handwriting. Sorry, guys. But there was a point that I wanted to make prior to this, and it really had to do with making sure that, big tip, there's a lot of companies out there right now where their whole entire marketing is based upon fast and easy, quick and easy pre-approvals. I'm not going to say any of the companies, but you can probably turn on the television right now and see a commercial for it. Guys, anything, if you're thinking about this, getting pre-approved for a mortgage, if you think about an iceberg, okay, and you have the water line, and above the water line, you see 10% of that iceberg, just a small little piece. But what's lying below that water line is 90% of that iceberg. That's what sinks ships. So if you think about the pre-qualification process in that same manner, getting a fast and easy pre-approval is just looking at that 10%. You're leaving 90%. all the things that can sink your ship for after you get a contract, and that's how most companies approach this. So do not allow yourself to get bought into the idea that, hey, this company is going to do it a whole much faster and easier, because that's just not the case. All companies, all mortgage companies, banks, they pretty much have to live by the same exact guidelines, same level playing field. So if one is promising you that it's so much easier and so much faster than another one, that should be a huge red flag for you. Companies should be promising to do the vast majority of the due diligence on the front end, essentially negating all of that risk, so that once you do find that house, once you say that this is the one that we want, you know that the financing is secure. So don't buy into the fast and easy process. It's not what's best for you as the consumer, it's what's best for the bank. Did we get clarification on what this question is?
We can answer it on the posts later on.
Okay, very good. We'll go back to that question later on. All right, guys, so we're going to wrap this up. We really do appreciate everybody that's checking these things out and watching it. We really do appreciate the comments and the questions, so please keep it up. If there's any topics that you guys want us to cover on a weekly basis or whatever it may be, please send them in. We're more than welcome to answer those questions. And thanks for stopping by, man. Really do appreciate it. And if anybody has any questions for Pat, tell them where they can reach you.
So my team and I operate here in the DC metro area. My personal site is patrickkilner.com or thekilnergroup.com, and we've got folks who can handle all of your needs, DC, Maryland, and Virginia, who are specialized in those areas, and we would love the opportunity to work with you, especially if you're working with a great team like the Kessler Group.
One of the best agents in the area, so highly recommend. If you got any questions or anything, this guy's top notch. So thanks to everybody. That's all we got for today. Check us out next week on KLA Now.